incentives in every way. We work on them in education, in business, every other place. And when I try to think of the incentives to get somebody... Well, I just mean that in terms of a woman's right to choose, and in terms of not having the rich get by with lower taxes than the people in their office, and there are a bunch of things that I agree with. There's limits to how much you can do and that. But
what about distribution of wealth?
I think that in the last 25 years, the Forbes 400, which is different than the IRS 400, Forbes 400 have gone from a couple $100 billion of wealth to $1 trillion or something like that. I mean, you've had the income of the top Americans quintupled, top 400 in the last 20 years. This is becoming a nation of haves and have-nots and super haves. Listen, anybody makes $250,000. I don't consider them rich, particularly if they live in New York or LA or someplace like that. So
that's why you put the level at $1 million first, and then $10 million second.
Yeah, listen, you want everybody to be able to get ahead in this country, and you want them to be able to enjoy the fruits of what they do.
You like being rich?
Yeah. I've been poor and I've been rich, and rich is better.
But the idea is that...
It should be a land of opportunity, and people that get rich, nobody's going to confiscate everything or anything of the sort, but the distribution in this country, market system has led to extremes. A guy that's wired like me, I don't have any special status in this world. I'm a great nurse, a great teacher, maybe much more valuable to society than I am. I'm wired so that I can figure out what things are worth.
Allocate capital.
Yeah, so, I get super rich, and somebody whose adenoids are in a certain, arrangement gets rich. But television makes a lot of people rich. I mean, Lou Gehrig held out for $25,000 in the late 30s. They benched him. They didn't bench him because he had to break the streak, but he had a long struggle. Television has made the 230 hitter or the 240 hitter, better than Ted Williams at 406. So there's a lot of serendipity. Everybody in this country owes their good fortune in some way to the rest of the country.
This is your 2010 tax return.
That's my 2010 tax return.
What will I see there?
Well, you'll see a lot of income. You'll see adjusted gross income of about $62 million.
Right.
But then I gave it. You're only entitled to deduct 30% of your contribution. I gave away a lot. So I've got a charitable carry forward of about $10 billion. I don't think I'm going to use it up. But then you get to taxable income, and I've got $39.8 million, and then you get down to tax, and I got $6.9 million. And
that comes to what percent of taxable income?
I think it comes to 17%.
17%.
I added
and other people in your office are paying an average
between
of 36%.
36, 33 to 41. Nobody's below 33. Nobody's below 33. I think that
how much of that has to do with the payroll tax?
Well, a lot, because they all pay it. I pay it incidentally, but it's $15,000 for me. $15,300. And it's $15,300 for all the people in the office, pretty much. And many of them have spouses where it's another $15,300 for the spouse. So with some of them, it's $30,000. And that's a lot of money to them, a lot.
You said you want the 12 most important people can read this, so the people in Congress who are on the CEPA committee. What else can be done to give it legs?
Well, I hope the Times is a launching pad. I think that it's a subject worth serious discussion. I already heard from somebody this morning that they're putting on Facebook. I never thought of social media as being a way to
they're putting this column on Facebook so you get a wider and a different distribution.
Yeah.
600 million.
I think if the public is educated on what goes on, I think their representatives will follow through to some extent. I think some members of Congress don't even understand that, probably. I invite them to take their own tax return, and make the same calculation I did. And incidentally, I don't have a tax shelter. I've never had a tax shelter. I don't drill for oil. I don't do any of that kind of stuff. The Congress has been my tax advisor. I mean, they're taking care of me.
You also make the point that in so many corporations that their biggest investment is not in plants and equipment, it's in lobbyists in Washington. So therefore they get deductions so that their effective tax rate is also much less whatever the maximum corporate tax rate is.
Yeah, well, that's true, and they're entitled, incidentally, to try and, I mean, there is a big rule book up there, and if the rule book's got flaws in it, the thing to do is to change the rule book, not count on everybody being on the honor system. I mean, the rule book is what counts, and I'm probably creating a lot of a business for the lobbyists now, because they'll be very busy defending the present situation. But I think it's the rule book that has to be looked at.
Do we need tax reform?
Yeah, I think so. But I think I would cure what I wrote about in the New York Times this morning first. That's very easy to
do those two things.
And that doesn't solve everything, Charlie. I mean,
and it would go ahead.
It probably tops. It would be $50 billion a year. Now everybody talks in terms of 10 years now, so it'd be $500 billion over 10 years. But this doesn't close the gap. I want to move up toward that 18.5 or 19, and I hope we get a lot of it out of growth. But I think it's kind of silly at this point to count entirely on that. And I think we've got to move the expenditures down to 21 or thereabouts %.
How do you measure President Obama's leadership on this? Because he could have done more to be in support of Simpson Bowles.
Yeah,
I wish he could have been out earlier.
I wish he'd been. I wish he had. Both sides were afraid to touch Simpson Bowles. I mean, that's pretty clear. I mean, it made too much sense. They didn't want to be associated with it. I would say this, though, in terms of the deficit limit negotiations, when the other guy throws the steering wheel out the window, you've got a problem. I mean, if you and I get in those cars and I see you throw the steering wheel out, I give up. You win.
Yeah, in fact, when you looked at the Republican debate the other night, and they asked them to raise their hand if you were in favor, of a level of spending cuts which were
10 for 1.
10 for 1.
10 for 1. I mean,
everybody would not go for that.
That was pathetic. That was pathetic. I mean, listen, I like Republicans. I mean, if you got Democrats on some core issue to them, they'd probably do something just as silly. But when they take that attitude, they are really saying, I want to win this primary. They are saying that the country be damned, I want to win this primary.
And it means that a certain element of a philosophy on taxation has taken control of the public debate within that party.
It has, particularly in terms of the primary, because the primaries push people to extremes. That's one of the problems we have in this country. But they can't believe in their hearts, all 10 of them, that a 10 for 1 ratio would in some way irreparably harm the country.
But you said you're prepared to make, as I raised earlier in this conversation, specific spending cuts and entitlements, changing Social Security, trying to reduce the cost of health care, which is essential.
Charlie, on my tax return here, you had George Will on a few days ago,
right.
And George said he couldn't understand why he was getting Social Security. Here it is. Social Security benefits, $32,680.
You get $32,000.
$32,680.
Right.
And
you don't need it.
A portion of it's tax-free, not a very big portion in my case. But
so you make it means test.
Oh,
in a second.
I mean, I think the idea when we've got this very, very rich family in this country, a lot of us have troubles. 60 million people live in households where the income is $21,000 a year or less. And I say to people who say, we shouldn't raise taxes, just try that for a few weeks. I mean, just try it. So I think that when we're going to have to do things that are even a little bit tough on them, maybe, I think you've got to come after some of us. And it certainly shouldn't be giving me Social Security. It's deposited in my bank account every month without me even knowing about it.
Where does this populist instinct in you come from?
I was born lucky. I was born in the United States of America. The odds were at least 30 to 1 against that. I didn't have anything to do with that. I was born wired for capitalization. I didn't have anything to do with that. So here I am. I won the ovarian lottery the day I was born. A lot of people don't. They go off to Afghanistan and fight for us to preserve things for me. I mean, when some of my friends complain about their taxes, I feel like saying, let's continue this conversation on the shores of Normandy. Let's just go over there and we'll just talk about this, how terrible your situation is. And I really think this country works wonderfully on a market system. We don't want to give it up. We have to control that market system in many ways, but it works. It works with the kind of incentives we have. It works with equality of opportunity. It's not perfect, but we've tried for it over the time. But the lucky ones still prosper incredibly disproportionately, under this. I'm not for having some kind of a czar and Washington decides what's proper for everybody, but I do think something that thinks about the 60 million people that are living at $21,000 a year or less in their household. I think a rich society should think about them a little bit every day.
That's the America you believe in.
Yeah, it is. I think it's the America most people believe in.
Are you okay by Dodd-Frank, that in fact that was the appropriate reform to do?
I haven't read it, Charlie. I think that there's two things that are needed to keep the financial system from going crazy. You know, one is keeping some limits on leverage, and we didn't do a very good job of that last time. And incidentally,
well, Dodd-Frank's devoted to that a little bit, isn't it?
Yeah, but Congress, you know, I mean, they encouraged huge leverage in Fannie and Freddie. I mean, that's where the money was. The second thing is having the proper incentives for people at the top of important financial institutions. You know, we saw institution after institution go to the government and say, we're too important to this society that you can't let us fail. So pour in the money, do whatever is necessary, and meanwhile, I'm going to go off and be rich. You know, the guy just screwed it up. I think you've got to have downside. I mean, really drastic downside for the people that run financial institutions, big ones that get into trouble. And we need those incentives, and I don't think they've attacked that yet. That can be done through the board of directors.
But too big to fail continues to exist.
Too big to fail will always exist. There will always be institutions that are too big to fail.
They're
deciding over in Europe that Greece is too big to fail.
Okay, but should they be broken up? I know that.
Yeah.
Should those institutions be broken up?
No.
As one form of Federal Reserve?
Yeah. We decided the whole banking system's too big to fail when we put in the FDIC, in effect.
Right.
I mean, we can't exist without them. But we have to do something to change the behavior of people that are at the top of those institutions, so they have huge downside. They didn't have downside. You know, people, I'm not going to name names, but those people did not have downside. They had downside to their reputation, but they walked away with tens of millions, hundreds of millions of dollars. So you can't have that kind of a situation exist and expect great behavior. And then you have to have some restrictions on leverage.
But has that changed?
The incentives have not changed very much. They say they've changed by paying them more in stock and all that, but that isn't draconian enough for me.
All right. I want to come back to Omaha.
Great.
I know. But, and look at just what the lessons of Berkshire Hathaway are for you. I mean, most of your businesses are growing.
Yeah.
Railroad's growing.
Everything's growing.
Everything's growing.
Pretty much. Mm-hmm.
You are finding that you need to hire new people?
Sure. We're investing a record $7 billion this year in capital investment, almost all of which is in the United States. That's at least $1 billion more than we've ever invested in the past. There's plenty of things to do here.
You have often said that, I mean, in a time like this, in which there are difficult times, that's the best time for you because you can have more opportunities to buy things that you think are of quality at better prices.
There's no question about it. I like buying on sale. Last Monday, we spent more money in the stock market buying than any day this year. You know, but it was
buying stock.
Buying stocks, yeah, not business. But buying business is very infrequent. I mean, there's a lot of happenstance in that, but you got to be ready to do it.
There's much discussion in the paper about buying another acquisition of Transatlantic, I think it is.
Yeah,
an insurance company.
We made an offer about a week ago. That offer's expired now.
So that's
yeah, we don't leave things out.
And you don't like bidding wars either.
No.
All right. But if you look at Berkshire today, it's different in the sense that more of it is owning businesses 100% than it is owning stock.
And we've been going that direction for 20 years, but people are seeing more and more evidence of it. But we employ 260,000 people or more, and we have added to employment this year. And
with the exception of homes and construction.
Yeah, we're getting
and carpet and all those businesses.
Yeah, everything associated with it.
Second largest real estate agent and all that.
Yeah.
Yeah, and that's the one thing. So Berkshire, in a sense, offers an opportunity to look at where the U.S. economic growth is.
I can tell you how many people had dilly bars yesterday. Everything from dilly bars to corporate aircraft.
Robert Zellick, the president of the World Bank, said this is a very, very internationally is a difficult time, and because what's happening in the United States and in Europe could very well be a warning sign.